Everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Monday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. I wanted to do a Monday market update because despite there not being any significant news, mortgage rates have moved in a good way today, and I want to explain why, because it's kind of a one-off situation. And then I also wanted to talk a little bit about some of the stuff that's going to be happening later this week. So mortgage rates improved today on the news that there is a new AI company based out of China that is making a product similar to OpenAI for significantly less money, costing less money than the US companies. And that caused a huge swing in the stock market because a lot of these stocks, especially Nvidia, that had the biggest impact, they rely on their future earnings are based on having a really strong footing in the AI space. And that is put into question now with this company called Deepseek, which to try out, I used it, and it's very similar to the ones I've used before. But again, fraction, 1/27th of the cost of the most dominant AI companies doing it right now. So I usually don't talk much about the stock market, so I want to try and explain why this is significant. So generally, there's not a huge influence from the stock market to mortgage rates. However, something this big where it impacts the S&P 500, which is made up of a lot of these top companies, including Nvidia, it can take investors out of the stock market where there's such a big move that they want something safer than the stock market. Typically, the stocks are more volatile, and things like treasury bonds and mortgage-backed securities, which are typically kind of running in lockstep, that's where the investors will put their money in. And we saw a significant move in that direction today. And when investors are more interested in buying treasury bonds and mortgage-backed securities, the prices come down. So that has had a significant impact so far. Also, and I don't think this is quite as impactful, but yesterday, Sunday, Trump announced tariffs on Colombia, and then after they supposedly met his demands and he said, we're not doing the tariffs. So I think anything where we're not actually implementing tariffs is going to be a good thing for mortgage rates. But the biggest thing was this announcement of this company out of China on the AI front. I can't say for sure if this is going to continue, help mortgage rates even more, hurt the stock market more, or it could be very easily reversed. It's just something we're going to have to follow, but it certainly has been significant today. The big things that are going on this week that definitely will impact rates to some extent. On Wednesday, we have the Fed meeting. They will almost certainly pause and not raise or lower interest rates. Now, I can see from someone who's been following the market and knows that the last couple of meetings the Fed has cut their rates, and yet mortgage rates haven't really gotten better, and in some cases they've actually gotten worse. I could see the natural reaction being, well, if they're going to pause rates, not cut them, that's going to be really bad for mortgage rates, right? And not necessarily, because the market had part of why mortgage rates got worse or stayed flat despite the Fed cutting rates is the expectation of future rate movement was lower. There was at one point expectation of 3 or 4 cuts in 2025 that dropped down to 1 in the Fed's latest projections. So now there's only the expectation of 1 rate cut in 2025. So there are very low expectations in that regard. And so a rate pause is to be expected at this juncture. So what I think is going to be more significant than the actual decision is what Jerome Powell says after the decision in his press conference. And a couple things to look for. He's definitely, I'm sure, going to be asked about Trump saying that we have to cut rates and kind of insinuating that he's going to pressure Jerome Powell to cut rates. And I'm sure Jerome Powell is going to assert his independence like he did at the meeting right after Trump was elected. That might be somewhat well received by the market, but I think the biggest thing is, what does Jerome Powell signal moving forward? Is he shooting down? Because there'll be people that ask about, have you considered hiking rates? Depending on how he responds to that. If it's like an absolutely not, and we would need to see significantly higher inflation, or really, really good, we'd see jobs data pick back up to even consider a rate hike. That would probably be a good thing. If it's like, well, maybe, not at this meeting, but we did talk about it at this meeting, that would probably be viewed negatively. Then on Friday, we have inflation, PCE data coming out. That's the Fed's more preferred method of inflation. And it typically follows the reading that comes earlier in the month, Consumer Price Index, or CPI, which came in good. It was lower than expected. So assuming that follows CPI and comes in lower than expected, that should be good for mortgage rates no matter what. But we will see. That doesn't always perfectly align with CPI, and how the stock market continues to respond on the AI front will definitely be something that I am watching closely. As always, if you have any questions or comments, shoot them below, or feel free to call, text, or email me. But thanks all for tuning in to this video, and I'll see you next time.